Ladies and gentlemen, good day and welcome to the earnings conference call of Indian Metals and Ferro Alloys Limited, hosted by Veritas Reputation. At this moment, all participant lines are in the listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, you may press star and 1 on your touchtone keypad. Please note that this conference is recorded. I now hand the conference over to Mr. Abhishek Sawant from Veritas Reputation. Thank you, and over to you, sir.
Good evening, everyone. We warmly welcome and express our gratitude to each one of you for being a part of today's earnings conference call for Indian Metals and Ferro Alloys Limited. I am Abhishek Sawant, your host for this session, and it brings me great joy to guide you through the proceedings as we analyze the annual financial results for the quarter and full year ended 31st March 2024. We are glad to announce an excellent operational performance during the year with the highest ever ferrochrome production, chrome ore raising, and captive power generation, which has set the stage for a strong financial performance. This achievement has come despite all external challenges, and it further solidifies Impal's position as India's foremost fully integrated manufacturer of ferrochrome in the metals and mining industry. While the detailed financial results are available on our company website and the stock exchanges, it's essential to note that our discussion may include forward-looking statements contingent upon known and unforeseen risks, uncertainties, and various other factors. To offer a comprehensive overview of our annual financial performance and address any queries you may have, we are honored to have an esteemed team member of our management team present today. Mr. Prem Khandelwal, CFO and Company Secretary, Mr. Vijayananda Mohapatra, Chief Operating Officer, Mr. Deepak Mohanty, overseeing the Ferro Alloys Business Unit, Mr. Binoy Agarwal, who heads the Power Business Unit, and Mr. Sandeep Narade, who is in charge of the Mines Business Unit. Our agenda for today begins with a concise summary of our Q4 as well as annual financial performance. Following that, we'll open the floor for a Q&A session, providing you with the opportunity to engage directly with our management team. Without any further delay, I now hand over the call to Mr. Prem Khandelwal, our CFO and Company Secretary, to guide us through the financial highlights. Over to you, sir.
Thank you, Abhishek. And good evening, ladies and gentlemen. I welcome all of you to this Q4 and FY24 earnings con call of the company. FY24 has been a very satisfying year for the company in the sense that the company has achieved the highest ever operational performance in terms of ferrochrome production, power generation, and mining output, and has been the second best year in terms of fact. So financial numbers and quantitative numbers are already in public domain, so I am not going to repeat those numbers again. But I would like to clarify just one item, that one-off item which is in the fourth quarter results relating to Utkal Coal Limited. As you may be aware of, the company had invested 111 crore in the share capital of Utkal Coal and had advanced a loan of 243 crore to the company for a coal mining project. But on the principal amount of 243 crore, the company had stopped recognizing interest since the date of calculation of coal block in 2014. But in fourth quarter, the nominated authority has quantified the compensation amount at 353 crore, consequent to which the company has recognized interest on 243 crore principal amount from 2014 to 2024, and the interest amount comes to around 220 crore. But as the compensation amount of 353 crore is not enough to cover the entire principal and investment amount along with the interest, the balance amount of 221 crore has been written off, which is forming part of other expenses. and the interest component of 221 crore forms part of other income. Apart from that, all other things are normal things. So with that, I would now request to start the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashok Patel from Molecule Ventures PMS. Please go ahead.
Thank you for the opportunity. First of all, I would like to thank the entire team and congratulate the entire team for an excellent set of numbers in a globally very tough environment. To start with, my first question is in quarter 4 consolidated P&L, we have seen an increase in other income by roughly around 50 crores compared to the usual range. So can you please specify what led to this increase in other expenses?
Other expenses, you were talking about consolidated account or?
Yes, consolidated other expenses.
Consolidated other expenses, we have usual like repairs and maintenance has gone up by 12 crore because of boiler repairs and furnace repairs were done. These are one of kind of expenses. And the selling expenses has gone up by 6 crore, primarily because of more tonnage we have sold in this quarter. And there are routine overhead cost escalation of around 10 crore. And there is a write-up of goodwill. As I have said in my opening remarks, we have written up the investment of 111 crore in UCL. So there was a goodwill amount of 21 crore also lying in the console account, which we had to write off. If you put all this together, you'll get the figure.
Got it, sir. So all these items shouldn't be, for example, goodwill write-off and everything shouldn't be part of exceptional line item?
Sonak, why have we done? Can you explain that?
So primarily this is on the basis of routine expenditure and going by the India's requirement. It is that since whatever was the investment amount that we had in the standalone financials of Infra in UCL, where we have also put a note that our 111 crores we are providing for impairment. On the same basis, on the goodwill which has been created in the consolidated financials has to be also written off as a part of the other expenses. And we cannot treat it as in the other exceptional expenses. So that is why we are taking it in the normal course of business.
Got it, sir. So my second question is that our EBITDA, what would be our EBITDA production cost for quarter 4, and how do you expect it to pan out in quarter 1?
Just a moment, let me see. EBITDA cost. EBITDA cost for Q4 is around 83,000 rupees a ton. And I think Q1 it should be in the same range, more or less in the same range.
Similar. But sir, we have seen coking coal has been correcting significantly in the last 6 months, and met coke is also expected to be corrected in the similar fashion. What was our coke cost in quarter 4, and what is the coke cost in our inventory?
Deepak, would you explain that?
Yeah. Actually, our coke cost, it is something like in the quarter 4, it is around 15,500 around.
Okay.
And which was in the previous year, if you consider, it was something like 23,000. So it has come down quite a bit because of the downtrend. And our existing coke, whatever we have, what we are using at the moment, so that is more or less in line with this. But it is, as you are telling also, the prices have come down. Maybe we have booked for the what will be shipped in the next quarter, early next quarter in June. So those prices are coming down and quite a bit. So going ahead, of course, that will take 3 months and all those things. Actual usage will be after maybe 4 to 5 months. But still our cost for the next quarter will be hovering in the same line.
Okay, but for Q2 onwards, we can expect a significant decrease in coke cost.
In Q2, no, it is remaining more or less in line. That's what in Q2. Q3 it will go down.
So roughly for how many months we hold the coke inventory, sir?
Yeah, we keep around 3 months inventory because it comes mostly from Colombia. So it has a shipping time of 45 days and then stacking the material for shipment, all those things. So normally we keep the inventory for 3 months.
Got it, sir. Okay, sir. I have other questions. I'll come back in the queue.
Okay, thank you, Ashok.
Thank you. The next question is from the line of Shubham Sethia from Bajaj Finance. Please go ahead. Mr. Sethia, your line is unmuted. Please go ahead with the question.
Sir, what was the specific consumption of coal in quarter 4 and for overall FY?
Binoy?
सर सुनाई नहीं दिया क्या what you are asking?
Sir, what was the specific consumption of coal for quarter 4 and then overall FY?
Overall specific coal is coming around 1.01 in ARB per megawatt.
And sir, specific consumption of coke per metric ton of ferrochrome production?
So basically for ferrochrome, it is around 450 to 500 kgs of the fixed carbon is required. So you can say 0.5 or 0.6 if you take on the fixed carbon basis, 0.5 to 0.6 ton per metric ton.
Okay. Sir, my next question is on the power cost. So what was the tentative power cost for quarter 4?
Quarter 4 or you are asking for FY25 Q1?
No. For quarter 4, FY24.
Power cost, variable cost is 4.37.
And fixed cost, sir?
Sorry?
Fixed cost?
Fixed cost is around 130.
1.3, sir?
130. 1 rupee 30.
1 rupee 30, sir. And sir, and for quarter 1, what we are expecting, sir?
We are expecting variable cost will be around 424 rupees 25, sir.
Okay.
And fixed cost will be at par with Q4.
Okay. Sir, my next question is on the NSR side. So we saw a very good NSR for overall quarter 4 and then for the FY24. What is our forecast for this Q1 and Q2 in terms of NSR, sir?
You mean net realization?
Realization.
Market has improved a little bit after Q4, so I think we can see an increase of around 3,000 to 4,000 rupees for Q1.
So total will be, sir, around?
This quarter it was around 1,02,000, so we may see 1,05,000, 1,06,000 in the next quarter.
Okay. Thank you, sir. That's all from my side.
Thank you.
Thank you. Our next question is from the line of Joe Shah from 7Cs. Please go ahead.
Prem, going back to our last con call, we were told that construction of boundary wall for Kalinganagar project was not started, could not be started because of some administrative issue. So now what is the status of this Kalinganagar land? When we are going to start the boundary wall construction?
PNM, would you answer that?
Yeah. Regarding this Kalinganagar project site, so there is a RNR issue, compensation issue. Or the ITCO has already even the disbursement process started, and they have initiated to the district administration. But in the meantime, election has already started, so they will give these displaced families after the election. So mid-June. So thereafter, this process will be started, construction of boundary wall.
But you straight away start, so there won't be delay on this side, or after monsoon we'll be able to start construction?
No. District administration will help us for construction because of the election. They don't want any law.
Right. Okay. Now one more question about this ethanol. What is our annual capacity in liters per year? How many liters will be produced per year from this ethanol?
Sir, this project we are putting is around 120 kilograms per day. Basically, it is from maize, broken rice, and damaged food grain. So it would take 300 working days.
Yes. No, production capacity. What about production capacity?
Production capacity, sir, 120 kiloliter per day.
Okay. And 20 kiloliter per day. And how many this tons of rice bran we need for 1 kiloliter?
It is not a rice, sir. We are more focused about the maize. So it will be basically maize based because that area maize cultivation is too much.
Okay.
That one. So that will be exact figure I have to check for the project.
Okay. No problem. Okay. Thank you. Yeah.
Right. Thank you.
Okay.
You're welcome.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
नमस्कार प्रेम साहब, नमस्कार सभी टीम मेंबर्स को. Sir, as you alluded to the earlier participant about the other expenses for this quarter, which is to the tune of 162 crore, that includes 21 crore of the royalty, the goodwill part.
Goodwill write-off, yes.
And other than that, sir, then the remaining 20 is also a non-recurring one, or what should we take into account for that remaining balance 20?
Those are, again, as I said, the 12 crore is repairs and maintenance, and this is again non-recurring. But 6 crore of selling expenses is because of higher tonnage. So that is recurring in nature.
Okay.
And other overheads of 10 crore is again non-recurring in nature.
Other last point, sir?
Other overheads of 10 crore is again a one-off kind of thing. So
okay.
That may not repeat again.
Okay. Sir, when we look at your note number 7, there is note number 6 rather. Therein you have proposed about some acquisition of 52 lakh shares of UCL. Sir, if you could explain the nature of the transaction and how much we will spend to acquire this 21% stake.
If you are, as you are aware of, INFI holding 79% stake in UCL. So our balance 21% is held by promoter companies, and we are in the process of merging that UCL into INFA. But we have been advised that if you make UCL 100% subsidiary, then the merger process will be much easier. Okay. That's what we are trying. But in UCL, since the value is nil, we are buying the 21% remaining stake at 1 rupee to make it 100% subsidiary, and then we'll launch the merger scheme.
Right, sir. And sir, when we look at the segmental reporting, therein we find that under the mining category on a revenue of 139 crore, we have booked loss of 110 crore. So are these all goodwills and all these issues that get factored into the segment under mining? Or how will you explain this, sir?
Sonak, are you aware of that?
So over there, what usually happens is that all the costs over in mines, everything, including whatever is the expenses that has been incurred for raising as well as mining, is actually shown under the segment. But since you know it is a captive consumption, so only those if we are sold outside are considered. Otherwise, whatever is the value of transfer that is accounted there as a revenue, and that is what is given to our FW business, as a Ferro business. So on a standalone mining, it shows a loss because the overall, all the costs which has been incurred in the mine are booked under the mining cost.
Okay, but this is only one-off for this quarter only. When every quarter we are booking revenue in this trajectory of 130 crore, and the profit is closer to a loss is closer to 1 crore. But only for this fourth quarter, we are seeing this loss rising to 110 crore. So that was my only reason. Even last year also.
It is actually dependent upon whatever we was mining and dispatch line to our Ferro business. So that can differ quarter to quarter depending upon whatever is our production plan.
These are the extraordinary costs. It's a significant number, 112 crore for the year as a whole.
No, it's a routine cost only.
Right, sir. Sir, when we spoke about this ethanol project, sir, what is the capex, sir, that we have outlined for the project, and when will we start spending on the same?
BNM?
The project cost is around 140 crores. And now we have applied for the single window clearance to the government of Odisha, and as well as we have applied to this environment clearance to MOF. So we have this one hearing on 14th May. They raised some concern that also we have replied. Hopefully we will get the issue by next month. So after that, this land belongs to us. So then we can start about the land preparation, all these things. Then simultaneously we will go for the project execution.
And when will we, any timeline, when will we be commissioning this project?
This will generally request around 12 to 14 months.
12 to 14 months. And on a capex of 140 crore, what should be the expected top line? Since 120,000 liters you mentioned, I think so. Kiloliters.
No, sir. There is a 120 KLD, we used to call kiloliters per day.
Per liter, right. Sorry. So at today's value of ethanol, what should be our optimum revenue at full capacity?
Samak?
Yeah. So it is what you correctly mentioned. It is actually 150,000 between 150 KLD. And in that cost of 140 crores, 30 crores is related to our own land. So we will not actually have any payout on that. So overall our investment will be somewhere around 110 crores. And on this...
we are asking about the revenue, turnover.
So turnover will be somewhere around, once we achieve that 150 KLD, it will be around 200 to 220 crores to start with. But it will depend upon the market prices, which can increase.
Right. And the margins are also in double digits. This product is, because I think the OMC will be fetching the product.
OMC is the controlling authority, sir.
OMC are the controlling authority.
Yeah.
Right, sir. And last point is on the tax provision part, sir. We find that there is a higher tax outgo. Any prior period item also we are paying, or what could be the reason? The profitability is definitely higher. So what is our tax rate currently?
Tax rate is 25% package. We have gone for new regime. So tax rate is 25%. I don't think tax rate is high. Because of high profitability, tax is high.
Correct.
Yeah.
Right. And just to conclude, employee benefit also include the director remuneration, the promoter's commission also. That is the reason why it has gone up for this quarter.
No. It has gone up because of the normal increment as well as the commission also. Because of higher profit, higher commission.
Higher profit, yes. And sir, I would also like to thank the board for the increased dividend payout and also the commitment which Panda sir alluded to during the television interview, wherein he did articulate the fact that he will be sharing the payouts with his investors, as has been the case as the precedent B. So we are really grateful to the team for agreeing to this fact, and rewarding their shareholders in the best possible way.
Thank you, Saket. This has already been the management priority to reward the shareholders wherever possible.
Correct, sir. And we have acted on the same path.
Thank you.
Thank you, Khandelwalji, and thank you to all the team members. All the best. Thank you.
Thank you. The next question is from the line of Satyan Wadhwa from Profusion Investment Advisors. Please go ahead.
So can you tell us what the production and sales number was for March quarter, and what would you expect for FY25?
Production for March quarter is 65,000 tons and sales is 68,000 tons. And next quarter,
68,000.
what are we planning for next quarter?
Next quarter it will be slightly lower because we had some maintenance in between, from which we started from March and completed in May. So in PCP2 and one furnace at Jodhwar and one furnace at Tadwali. So that will be slightly lower, around 62,000 it will be in that range next quarter.
And for the full year, what would you project?
We are expecting around 250 to 260,000 as usual in that range.
So 62,000 to 65 per quarter. Is that what you're saying?
I told normally 250 to 260 in that range. Around 260 only it will be, because we had some maintenance in the initial part of the beginning of the year and all. So taking that into which happens normally after 5 to 6 years. So now in two furnaces, that will reduce, cannot go to the this year level probably, but it will be in and around 250,000.
Okay. All right. Great. Thank you.
Thank you.
Thank you. The next question is from the line of Ashav Patel from Molecule Ventures PMS. Please go ahead.
Thank you for the opportunity again, sir. My question is, clear margin pressure is visible globally, even on large South Africa-based smelters like Merape. What is the situation exactly in China right now? Given that they don't have captive ore, what sort of margins do you think the non-integrated players over there would be making? And do you expect it to inch upward?
Let me answer. So actually Chinese market, in fact their ferrochrome production has gone to 770,000 per month, which was in the range of 600 to 650. And the stainless steel production also accordingly has gone up there. Only thing, China now they have a strategy to operate at very low margin but have higher efficiency and higher operational ratio. So which is going on, and their domestic demand also is not very bad, but only the problem is real estate sector, for which the government has given certain declarations that they will buy out and bail out this real estate. If really that happens, things will become better. Otherwise, at the moment the situation is quite steady. Demand supply are matching and going on, and things are not. It is not going to go up further at the moment unless government takes some initiative. Otherwise, it is more or less stable and in the range of around 98 to 99 cents, which is the level is workable for most of the people.
Got it, sir. And sir, on EBITDA basis, EBITDA per ton basis, we will be more profitable than Chinese smelters, right? Is that correct understanding?
Absolutely.
Okay. So, what sort of chrome ore inventory is currently present in Chinese port? Rough ballpark figure.
Yeah. It's around 2.6 to 2.7 million tons, which is mostly 50 days consumption.
50 days consumption only. So the inventory looks to be quite on the lower side of the spectrum compared to the usual.
Little bit delay in shipment and Red Sea issues, which is delaying the thing. But nowadays, probably they are maintaining in that range.
But does this mean whenever
like earlier 3 million, more than 3.5 million, they were in the range of 2.1 million tons stocking. But what I'm telling, that is at the ports. Of course, there will be some inventory in the plants and all. But port stock wise also, it has now they have gone up from 2 to 2.1 million to 2.7, 2.8. In that they are maintaining at the moment.
But given that whenever the demand improves in China, does this low inventory mean that price increase could last for longer time until they actually procure the ore again from South Africa and convert it into ferrochrome and provide the supply in the market?
You see, the demand, if it goes up, naturally prices will go up. But Chinese are trying to maintain a low margin both in ferrochrome and also in stainless steel. Rather, some destocking took place, which has got of stability in stainless steel, particularly destocking. So they are maintaining that as a strategy. So that's why they don't want to take it high and then bring it down similar way, like which was happening earlier. But nowadays they are operating with low margin at all the places, but maintaining operational level of 90%.
Sure, got it, sir. Sir, my next question is regarding the upcoming capex. So as we have already announced the 1,500 crores of capex, I just wanted to know how the fund outflow is expected to be spread over the next 5 to 7 years.
You want year-wise breakup?
Yes, roughly year-wise breakup. I understand it exact can't be laid down at the start of the project.
Yes, because that will be difficult to give the year-wise. But since the spread is over a period of 6 to 7 years, we are quite hopeful of funding it through our internal approval.
Exactly. Okay, yes. Got it.
Yeah. Yes.
So except the smelter, the entire mining capex would be spread out. So in a single year, we won't require any significant amount.
Yes, even smelter also will be spread over a period of 18 months. So.
And what is the current status of EC, environmental clearance, regarding this 1 lakh metric ton enhancement?
EC has been recommended for grant of EC. I think within a month's time we should be getting it.
And for chrome ore enhancement?
Chrome ore enhancement already we have got city for Mahagiri from 3 lakhs to 6 lakhs. We have already got CTO and we have produced in the last quarter. And for essence also we have got EC for 6 lakhs, enhancing from 3 lakhs to 6 lakhs.
So mining EC has already been achieved?
Yeah.
But we cannot sell this as a merchant miner, right? This enhanced chrome ore?
No, up 50% of that we can sell, but as a policy we don't do that. That's why we are adding more furnace capacity.
Got it, sir. And sir, given that we already have a robust balance sheet with INR 300 crores of net cash and also expecting the around 250 crores as a final settlement from Utkal C, and we are already generating 400 to 500 crores of annual cash flow, which is sufficient to fund the announced capex of 1,500 crores as mentioned by you. So my question is that in the past, management communicated of further expansion beyond this 1 lakh metric ton capacity. So any concrete plans have been laid down on those parts?
No. As of now, beyond that, we have not planned anything concretely. So because any expansion will be along with the ore output. Without ore, we cannot expand in the furnace further. So
got it. Now, but sir, we are meaningfully increasing our ore. At the same time, we are increasing our furnace capacity only by 30%.
No. As of now, you see, whatever extra ore we are going to get, maybe after 12 to 18 months, by that time when this furnace will come up for operation also. And in the next phase, when we are going to get further ore, then we'll plan the furnace. That is at very initial stages now. No concrete plan from that as of now.
Got it, sir. Got it. All the best from thank you. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Shubham Sethia from Bajaj Finance. Please go ahead.
Hello.
Hello.
So our annual production for the year was around 2.6 lakh tons. With adding this 1 lakh tons of capacity, so this year output will be in the same range only, right? 2.6 lakh tons.
Yes.
And from the next year onwards, we can expect, like, if we take 18 months of capex time for the smelter, so we can expect half of the capacity inaugurating from the next year onwards, right?
In FY27, we can expect that capacity to be operational.
Okay. Sir, my next question is on the cost front only. So, for the overall production in Q4, what was our specific power consumption? Specific power consumption for chrome production.
So basically, specific power consumption is around 4,000 units.
Sorry, sir?
4,000 units per ton of ferrochrome.
4,000 units. Okay.
Roughly.
Thank you, sir.
Right. Thank you.
Thank you. The next question is from the line of Anand Mundra from My Temple Capital. Please go ahead.
Hello. Yeah, good afternoon, sir. Thank you for the opportunity. Sir, just wanted to seek a clarification. You mentioned the current EC limit is 1.2 million ton for us already. Is that correct?
That's a EC we have having a 1.2, 6 lakhs per MMC and 6 lakhs per Sukinda. Okay. After EC, we have got the 6 lakhs production from Mahagiri, but 6 lakhs per Sukinda will start after getting this underground operation, which will take 6 to 7 years.
Okay, so right now we are producing mainly from Mahagiri. Is that what you're saying?
And actually, we are doing this open cast mining from Sukinda that we are restricting to 3 lakhs. So that after underground operation, we are keeping those stocks. And the rest incremental everything we are doing from Mahagiri. Because Mahagiri operation, CTO, the consent to operate, that we have got up to 6 lakhs.
Okay. So once the currently Sukinda you just restrict to 3 lakhs and Mahagiri you will ramp up to 6 lakhs. That's
for requirement with our consumption.
And once we have to do the phase 2 expansion of Kalinganagar, at that point of time we will explore expanding Sukinda to 6 lakhs.
No. Up to that 1 lakh will require around 2.5 lakh ore. So 9 lakhs is there. 3 lakhs from Sukinda, 6 lakhs from Mahagiri.
Okay. So Sukinda will not do beyond 3 lakhs. That's a correct understanding.
Because unless we go for underground operation, we have to reserve our open cast stock.
Okay. All right. Thank you. That's it from mine. Thank you.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead, sir.
Sir, a small point. You mentioned that for this quarter, for Q4, we have some overhead and exceptional expenses in the overhauling part, and that we have booked for this quarter, and the volume dip we will see in the next quarter. This is what you have communicated.
Those are mostly yes. Yeah. Those are overhead expenses. So it has nothing to do with the volume, Saket. Volume is more or less fixed around 60,000 tons every quarter.
Okay. No, sir. When we look at Q4 numbers, the production numbers is at 65. Yeah. We are looking at a lower volume number. This is also not a monsoon quarter. That will happen later on. So for Q1, we are expecting production in the range of 62,000. So, and for that, the expenses will be different. I was just trying to understand whether we have booked the expenses in March quarter or it will have a bearing again in the first quarter.
I think it will be basically something will be major equipment and others are when issued and booked in the March. Something also will come in April, so some amount. But the production will be mostly in the level of 63,000. Okay.
Right, 63,000 should be our tonnage for the first.
Yeah, tonnage wise for this quarter, ensuing quarter.
Okay. And sir, our realization, as Prince sir, you mentioned, are currently trending up by 3 to 4% for as of now. We are 45 days into, 2 months into the quarter. So the realization trajectory is spot prices are up by 3 to 4%. That is what you alluded to.
3 to 4,000 rupees per ton.
Per ton. That is the spot prices.
Yes.
Okay. And if we take, sir, the EC, the percentage that we take for the quarterly run rate that we book every quarter, what is that trend there, sir?
No, I didn't get you, Saket. Can you repeat it again?
So we also have a contracted price index that is set every quarter. Where is that index currently? What is that indicating?
So basically you are talking about the benchmark.
Benchmark, right, sir. I missed the word.
Benchmark price has gone up in this quarter by 8 cents from 144 to 152 cents.
Okay, and that benefits we will get for in the Q1 realization in terms of the contracted volume.
You see, we will get benefit naturally for that reason. It will go up, and the thing what Mr. Khandelwal has told that it is increasing, taking all those things into account, will gain 3 to 4,000 in the average realization.
Okay. But only dampener will be, we will be selling less than what Q4 has been. Q4 is the highest at 60, closer to 68,000.
But as the production will be around 53,000, naturally the sales projection is also at the same rate, 50. Because we don't have really stock to operate, do beyond the stock. Already last year we have done, so we are at the minimum stock. So that's the level what we are expecting, 53,000.
Right. And sir, our mining lease are for which year? When will the expiry or the renewal come?
Mining lease up to 2049 and 2055.
Okay. Right, sir. Thank you once again.
Thank you. Thank you, Patel.
Yeah.
Thank you. The next question is from the line of Joe Shah from 7 Seas. Please go ahead.
Deepak, I understand that from June onward, Maraf, South Africa, they will stop announcing a benchmark price. So what will be the impact on the pricing? How will be able to decide on the price?
It's a big impact, just that bombshell has come on 20th of this month.
Yes.
So people are working out, have to work out with people, because that was a good base to start negotiation with, but which will not be there.
Right.
But eventually things will, people have to, there are many other indices like your CRU, first market, and many other things are there.
Okay.
So it has to be dealt with individual customers, how to bring in certain, whatever the way to for the negotiation and moving ahead. Of course, everybody, including Glencore and all, they are working on that. So lot of issues were there for which they had now stopped it. But anyway, so the things have to change, and change that we managed well. So we will be doing all those things in the coming days.
Right. Now, Deepak, one more thing. I need your views on macroeconomics, because now our future for IMPA will be based mainly dependent on the ferrochrome price realization, we have stuck around 1,000, 5,000, 4,000, 6,000, something like that. But now people are talking about the Fed rate cut in maybe say 6 to 9 months it could happen. So will it increase the demand for commodities and stainless steel and hence ferrochrome? What is your view?
You see, I attended ICD where SMR presented a paper where particularly for stainless steel sector, they are expecting around 4% growth. And even the ISSF have told also there will be 3.6% hike in stainless steel consumption. And we are expecting, which is at 58 million stainless steel worldwide production, that to reach 59.5 million tons in this 24 calendar year. So I don't think there will be much issues at the moment. People are changing. But I think it will not, and China trying to bail out their residential, real estate people. If it happens, things will be more or less steady.
So, but suppose they Fed rate cut, then it will increase the demand of stainless steel beyond our target. Consumption will go up. It is generally believed that with Fed rate cut, consumption will go up. And
you see, China is producing more, but they have to have the opportunity to sell. And Europe, particularly Germany and many other places, are not in very good state economically. Inflation, be it inflation and interest rates and everything. So with all those things, that's why people are, even with the negative sentiment, they are telling that consumption is expected to grow around 3 to 3.5%, which is, according to me, is very good.
Okay.
And if that remains, things will not be haywire.
Okay. Thank you. Yeah.
Thank you.
Thank you. As there are no further questions, I now hand the conference over to Mr. Abhishek Sawant for closing comment. Over to you, sir.
Ladies and gentlemen, your presence on this conference call today has been greatly appreciated. We've had the opportunity to explore Infra's future growth strategies and discuss how we plan to navigate through these challenging times. Our optimism for the growth journey ahead, not only within India, but also in other regions, remains steadfast. On behalf of the company's esteemed board of directors and dedicated management team, I extend our heartfelt gratitude to each one of you for your active participation in today's call. Your interest and insightful questions have been a valuable contribution to our discourse. Should you have any further inquiries or require additional information, please do not hesitate to reach out to us, or you can contact my colleague Aryan Rana at aryan.rana@caritasreputation.com. We remain at your service to address any queries you may have. Once again, thank you for being a part of this conference call. We eagerly anticipate a promising future and a continued growth together in FY2025. Wishing you all a fruitful and fulfilling time ahead. Thank you.
Thank you.
Thank you.
Thank you.
Thank you. On behalf of Indian Metals and Ferro Alloys Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.